And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very.
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Imagine a world where the dollar no longer dictates the pace of global trade. A world where silver isn't just a precious metal, but the backbone of international commerce. This isn't a fantasy, it's the future. Today, we're unraveling how the potential collapse of the dollar and the strategic maneuvers by the BRICS nations could catapult silver to become the most traded and valuable currency on the planet. Stay with us as we dive deep into this unfolding saga, where fortunes could shift and a new global economic order emerges. Don't miss out on this journey to the future of finance.
I don't know that it happens in 2024, but I would say it's damn near close to 100% that it does happen. That is what they are intending to do, barring any unforeseen events. It is how you gain legitimacy. When people say, who's going to trust Russia or China, they'll say, look at the European Union. It didn't work. Well, they didn't have the glue that holds it all together, and that glue would be a backing of something that is legitimate. And if you back just enough to inspire confidence, you still have the ability to expand the money supply, to do monetary things that, a 1-to-1 ratio wouldn't do. And I just think there is no way that these countries, because of all of the points that are fair and valid about China, about Russia, about all these countries, that I think it's important to look at the way the rest of the world looks at the United States when we make that comment. How do you think Iraq feels about the United States? Now, again, I'm a patriot. I love this country. I am not rooting for this to happen, but I'm saying when you look, if you are in an argument or you are in a debate class or you're an attorney, if you only focus on your argument and don't look at their argument, you're going to lose. And I think their argument is one that is compelling. And I think the only way to make it work, to take all of that out of the equation, the lack of trust in a new system based on who's backing it, well, fine, I agree with that. But what if you have a way to sidestep that? And that is to pledge what is now, according to the BIS, the only other tier 1 asset to something like that is immutable, like a blockchain, and show the veracity of it so you can't screw with it.
As we stand on the brink of a monumental shift in global finance, the dominance of the US dollar, a cornerstone of international trade for decades, is being challenged like never before. The BRICS nations, an influential bloc comprising Brazil, Russia, India, China, and South Africa, are leading this charge. Frustrated by the constraints of a dollar-dominated world, they're seeking alternatives, pushing for trade in their local currencies, and reshaping the financial landscape. This isn't just a rebellion, it's a strategic move signaling a deeper discontent with the current global order. As these nations convene, proposing a new financial paradigm, the question isn't if the dollar's dominance will wane, but when. And as we peel back the layers of this complex narrative, we uncover a startling beneficiary of this shift, silver. Join us as we explore how geopolitical tensions and the quest for economic sovereignty could not only dethrone the dollar, but elevate silver to unprecedented heights. Remember, this conversation isn't just for economists or investors, it's for anyone keen on understanding the future dynamics of global wealth and power.
I think yes, it is speculative. I think ultimately people will look at it as a store of value, but you don't see a store of value go from 65,000 down to under 20,000. That's too volatile. But what it is it's an alternative to the fiat-based system. And for that, I respect it. And, Doug Casey made a phrase very popular, that one that I say all the time, and I give him credit for it because it's genius. And is that, gold and silver are assets that are not simultaneously someone else's liability. And in the world where counterparty risk is really growing, I think that will become an ugly word, ugly phrase, maybe this year or soon with the banks failing and whatnot. I think Bitcoin, if held properly in a cold storage wallet or whatnot, is the same thing. And it's the removal of counterparty risk in a world where I think counterparty risk will be something that will dominate the news. Look, bail-ins are something people need to understand. Google it, read about it. And if a bank fails, it's supposed to be bailed in, which means you're an unsecured general creditor, and nobody in this country understands that. And they will understand very quickly how diabolical the phrase counterparty risk truly is. So I think there's a lot to be said for it, but I don't think it's the store of value that gold and silver are. But I do think it's maybe the next best alternative, and it's certainly going to make you probably a lot more money than gold and silver would if it goes to where people think. So take some of that profit and put it in money that's been considered money since the beginning of time, and that's a way to hedge your bet.
Amidst this backdrop of financial rebellion and the search for an alternative to the US dollar, the BRICS summit in Johannesburg emerges as a pivotal moment in history. The BRICS nations are not just contemplating a new financial order, they're actively forging it. Their collective discontent with the dollar's reign has set the stage for a potentially seismic shift in how global trade is conducted. By considering the inclusion of other powerful economies like Saudi Arabia, the world's second-largest oil producer, BRICS is not only expanding its influence, but also signaling a future where trade in precious metals could become the norm. This strategic expansion isn't merely a challenge to the West's financial supremacy. It's a clear indication of the bloc's aspirations to reshape the economic landscape in favor of a more balanced, equitable system. As these nations lean towards trading in their own currencies, and possibly even in gold and silver, the implications for the global financial system are profound. The dollar's unchallenged reign is under threat, and in its place, a new multipolar world of finance is beginning to take shape, one where silver could play a starring role. In the annals of history, silver, alongside gold, has served as the bedrock of monetary systems, a symbol of wealth, and a bulwark against economic turmoil. This isn't just about nostalgia. It's about understanding the intrinsic value and stability that precious metals bring to the table, especially in times of uncertainty. As we delve into the past, we find that gold and silver were not merely commodities, but were revered as the ultimate stores of value, units of exchange that transcended the limitations of fiat currencies. The renewed importance of silver in today's geopolitical chess game is no coincidence. With the BRICS nations pushing for a departure from the dollar and exploring alternatives that could include precious metals, we're witnessing a revival of interest in silver's timeless value. This historical perspective isn't just academic. It provides a crucial insight into why, in a world brimming with digital currencies and volatile stocks, silver's allure remains undiminished. As we stand at the cusp of potentially groundbreaking shifts in global finance, the enduring legacy of silver as a safe haven seems poised to reclaim its place at the heart of economic transactions, resonating with investors and nations alike who seek stability in an increasingly unpredictable world.
I had a guy that worked for me. His name was Andy Hoffman. He was maybe the most prolific writer I've ever met. And he came to me many years ago, and Bitcoin was $300-400 an ounce. Then it started to really take off. And he said, listen, I have this idea of bridging the gap between, these new Bitcoin millionaires and old money gold. I said, that's a great idea. And our things didn't really work out so well. But the point of it is, since the day it came out, even though it was something that I didn't understand and owned a tiny, tiny bit of, I understood that we both, and as I was speaking with one of your associates before this interview, I said to her, Anna, they both came in through the same door. The people who buy Bitcoin and the people who buy gold, they come in through the same door of understanding. Where the divergence is that I think the people who buy gold are looking to preserve rather than to profit. And arguably the people who own Bitcoin are looking more to profit than they are to preserve. So why not marry the two? Why not take some of your chips off the table when you make a gain and put it into gold? It doesn't have to be an either or, because the ideologic thought process to get to, push back against the mismanagement of the dollar, of inflation, of things that get people in through that door, they're the same or damn near close to it. Where we diverge is that I don't sell gold and silver to people to get wealthy. It is wealth and has been for 5,000 years through every pandemic and 2 world wars and German hyperinflation and the Great Depression. Every central bank on the planet nearly owns it. They're the ones buying it. So that should tell you something. But I don't disparage Bitcoin at all. In fact, I think it's intriguing, especially in light of what's happening to the dollar. So my advice to people, would be do not think either or. Do not be narrow-minded. Be more open-minded. And, I have a friend that I used to travel with. Our families would travel together. We'd always end up in casinos somehow when our kids would go to bed. And he would, every single time we left the casino, he cashed in at the cage with tons of money. Finally, I said, how the hell do you do that every time? I'm sitting there with you. I'm watching you. Where do you come with all this money? He says, every hand I win, Andy, I put a green chip in my pocket. $25 every time. And at the end of the night, he's got a pocket full of chips. And that's the analogy here. Bitcoin is very volatile. Look what it did today because of rumors that the SEC will not, that they're going to reject these applications for the Bitcoin exchange ETF, exchange traded fund.
ETF, yeah.
And bang, it went straight down. But it went straight up earlier in the year. So why not take some profit off the table and put it in old money to guarantee that when you leave the casino, you got money in your pocket to go to the cage and cash it out? That would be my advice to people. It's not either or. They're both important or should be both considered, and look at it as an either or rather than a one, and look at it as a combination, both rather than either.
The concept of a silver standard might seem like a relic of the past, an echo from an era when the physical value of currency was as tangible as the coins jingling in a pocket. Yet, understanding this monetary system is crucial as we navigate the potential shifts in global finance today. The silver standard, a system where a country's currency value is directly linked to a specific amount of silver, offers a stark contrast to the fiat currencies that dominate our modern economy. Unlike fiat money, which relies on government regulation and faith in the issuing authority, the silver standard's value is underpinned by the physical silver it represents. This concept isn't just theoretical. It's a testament to the intrinsic value of silver as a finite resource. Under the silver standard, currency holders could, in theory, exchange their notes for a fixed amount of silver, anchoring the currency's value in something tangible and crucially scarce. This scarcity is vital. In a world where central banks can print money in vast quantities, the appeal of a currency backed by a physical commodity becomes clear. It's a hedge against inflation, a bulwark against the devaluation that can erode savings and destabilize economies. Yet, as we stand in the 21st century, no nation operates under a silver standard. The shift to fiat money has been universal, a move towards greater flexibility in monetary policy, allowing countries to respond more dynamically to economic crises. But this flexibility comes at a cost: the risk of inflation and the potential for financial instability driven by the very policies meant to prevent it. As we explore the possibility of silver's resurgence in a world looking beyond the dollar, the principles of the silver standard offer a compelling framework. It's a reminder of the stability that tangible assets can provide in the global financial system. In an age where digital transactions can move billions across borders in seconds, the idea of currency backed by physical silver might seem antiquated, but it speaks to a fundamental desire for assets with inherent value. Silver's history is deeply interwoven with the story of economic development, from ancient civilizations to the bimetallic systems of the 19th century. Silver has played a pivotal role in commerce and trade. Its journey from the mines to the mint, from the vaults of empires to the pockets of the populace, is a saga of human endeavor and economic evolution. This isn't just about nostalgia for a bygone era. It's about recognizing the enduring value of silver in a world that seems increasingly detached from the physical realities of wealth. The conversation around reintroducing a silver standard or increasing the role of silver in our financial systems isn't merely academic. It reflects a growing awareness of the vulnerabilities inherent in our current financial architecture. The debate underscores a yearning for a more stable, predictable foundation for our economy, especially as geopolitical tensions and technological advancements make the financial landscape more complex. In this context, the exploration of silver's potential role isn't just about looking back, it's about looking forward. As we consider the future of finance, the lessons of the silver standard remind us of the importance of grounding our economy in assets that hold intrinsic value. This exploration isn't just for historians or economists. It's a crucial consideration for anyone interested in the future of money. As we ponder the possibilities, silver stands not as a relic of the past, but as a beacon for a more stable, tangible future in global finance.
The finance minister from Russia has always said basket. I've always reverted in my mind to gold. Why else would the BIS, after 70 years of it only being dollars and treasuries, say gold is now tier one? To me, that's the ultimate. And I think the basket of commodities is difficult. because of the characteristics that gold maintains. If you go back and look at, I think it's Aristotle's characteristics of money, 7 or 8 characteristics of money, that's what gold is. And it's not like you can have bushels of wheat pegged to the system or barrels of oil. I guess you could, but I think it would have to be rotated and all that kind of stuff. So ultimately, I would think it would be a gold-backed currency, but I can't say that for sure because that's in conflict with what the Russian finance minister has said candidly, that it would be a basket of commodities backing their new currency aspirations. So I don't know, but in my mind's eye, I see it being gold and primarily gold.
So having said that, and having just confirmed all of the data points that are moving in the direction of this happening and accelerating in 2024, we did see gold hit a new all-time high in 2023 of around, $2,148 an ounce on December 3rd. Right now, spot gold is trading at $2,040. What's your outlook for gold in 2024?
Look, I mean, gold held up very well in the face of rising interest rates. And you can say what you want about the real interest rates and say what you want about the changing of the metrics by which we gauge interest rates. And I always tell people, go to John Williams' shadow stats. He'll tell you interest rate or inflation's at 10%. So, but let's just take the Fed at their word and say that, for the first time in a long time, that theory of real interest rates completely and totally derailing the gold rally was wrong. It held up incredibly well in the face of 11 straight increases in interest rates. And I think that when you realize that not only the most well-funded, but the most well-informed traders on the globe have been buying gold hand over fist for the last 2 years, it's very compelling. And then when you take a look at what's going on right now, and 2 more things really. One being, yeah, you're right, it did hit all-time highs on GLD. It did hit all-time highs on the London Metals Exchange, and yet it's completely zero hype globally about it, or at least in North America about it. Why is that? That doesn't make sense to me. I do believe that this year there will be an inflection point, or soon anyway, that the mainstream starts to realize what gold is and the virtues of it. Maybe it has to do with the bank bail-in, which most people don't even know what the hell that is, but it was written into law in the Dodd-Frank Act. But here's something that a lot of people aren't talking about, and I think it should be. And that is that if we go back to the 27th of December, just a few days ago, and I don't have what it was on gold, but I do have what it was on silver, but I can give you anecdotal evidence on gold. And that is the closing price of silver on the 27th on the Shanghai Gold Exchange, the Shanghai Metals Exchange, Gold Exchange, was $26.50 an ounce. And on the CME or the LBMA, it was $24.31. It's 10% higher in Shanghai. Now, gold has been trading as much as over $100 an ounce higher in Shanghai than it has on the LBMA and it has on COMEX. Slowly, methodically, little by little, turning up the heat, arbitraging all of the gold and silver that isn't nailed down. And so I think the bottom line is, look, from a technical standpoint, $2,000 was the resistance that could never be broken. Now it seems to be the floor. So I would expect things or the market to do well for gold here in 2024. But I think when people make predictions in a time frame, and Mr. Rickards, who I respect tremendously, I think he paid the price for doing that. I would just simply look at the macro and say, yeah, the chances of it happening, whether it be this year or next or the year after, is the probabilities are huge.
But you're ready to call a bottom at 2,000.
I would say that it from a technical standpoint, it represents a floor. Now, does that mean it could be broken? Look, if you look at what happened today and look at how the minute, right, of course, the day that there's, a Fed meeting, the minute it closed in Asia, and it was on the upswing in Asia, the minute it hit the corrupt AM and PM fix in London, bang, it just collapses. It hits COMEX open, bang, it collapses even more. What I'm getting at here is that the West controlling the metals price, where in a market right now, in terms of silver, it is rehypothecated 1,500%. There's 1,500% more paper contracts than there are bars backing. That's what the Hunt brothers noticed. And I think the legitimacy of an exchange that can price oil at -40 a barrel or can smash the price of silver like that where a levered futures market, the tail wagging the dog, controls the ultimate commodity price, is something that these countries right now deeply resent, but they're not bitching about it because they're the ones buying it all. And it is the price setting mechanism of the world for now. But wait until there's no metal or commodities, any of these price commodities that will be delivered at these stupid prices. And then watch how fast it shifts eastward. I think ultimately you'll see something like the Shanghai Gold Exchange or an exchange in Dubai take over for legitimate price setting rather than a COMEX market that allows rehypothecation and naked shorting, all of these things that are creating distortions in these commodities that I think are not real.
As we pivot our gaze towards the current dynamics of silver prices within the financial markets, it becomes apparent that we're navigating through a period of anticipation and speculation, particularly in light of upcoming Federal Reserve decisions and economic indicators. The price of silver, traditionally seen as both a precious metal and a haven asset, is exhibiting signs of volatility, influenced by global economic sentiments and monetary policy expectations. This fluctuation is not occurring in a vacuum. It is deeply intertwined with the broader narrative of the US dollar's dominance and the burgeoning efforts by the BRICS nations to challenge the status quo. Silver prices at the moment seem to be caught in a tug-of-war between bearish sentiments driven by the anticipation of Federal Reserve speeches and the potential bullish catalysts stemming from geopolitical shifts and the quest for alternatives to the dollar. The resistance level at $23.55 becomes a focal point, a threshold that could signify a shift in market sentiment, pending the broader economic indicators and the Fed's policy direction. This ongoing uncertainty underscores the market's sensitivity to not just immediate economic data, but also long-term geopolitical and financial trends. The intricate dance of silver prices in the shadow of Federal Reserve decisions highlights the complex relationship between monetary policy and commodity markets. Federal Reserve communications are scrutinized for any hint of shifts in policy that could influence the economic landscape. The delicate balance the Fed seeks to maintain between stimulating economic growth and controlling inflation has direct implications for the value of silver. As investors and central banks alike assess the Fed's stance, the price of silver becomes a barometer for expectations around inflation, currency devaluation, and the overall health of the global economy. The resilience against the hegemony of the US dollar. The strategic importance of silver in this emerging multipolar currency world cannot be overstated. As nations increasingly seek to diversify away from the dollar-centric trade and reserve systems, silver, alongside gold, emerges as a pivotal element in this diversification strategy. The potential for silver to act as a stabilizing force amidst currency fluctuations is gaining recognition, reflecting a collective anticipation of a future where the traditional financial paradigms are upended.
My friend, there was a report that wasn't well publicized, but you'll find it if you look, and that is that Xi Jinping and Modi met on the sidelines at the summit and basically said that, look, we will do all we can to resolve our border disputes. Of course, you mentioned Iran and Saudi Arabia and building embassies in each other's countries and the first railway and road being built between Iran and Iraq. And look, it's not going to be easy, but that's why I believe when you have a system like they are set up, or they're setting up or have set up, it lends itself to cooperation in the respect that the presidency, as an example, rotates each year. You mentioned it goes to Russia, just left South Africa. Each year, the main countries then get to take over the presidency. And I think the way that you resolve that is to not make any one country a dominant central figure. And that's where blockchain and that's where commodities that are pegged to a blockchain come into play, to give everyone equal voice, equal footing, equal say at the table. Look, I would simply say this. When you look at the way things are being done, in large part, and the Belt Road Initiative is a good example, they are being done in a mutually cooperative manner where, everyone is winning in the endeavors of increasing the infrastructure, of building bridges and roads and maritime channels and building oil refineries and gold and silver mines and all of the things that help these countries industrialize. It's not going to be easy, certainly not, but I do believe it will be one that will be built on cooperation. And the very fact, yes, they may have suspended flights over a technical issue, but again, this is not something that you can just snap your fingers and say, okay, it's all fixed. But you can see the drive to make it work. And look, if countries don't agree with the U.S., we just come in and we do things in a more coercive manner. These countries are at least trying to do it diplomatically. I'm not saying that this is going to be something that will be easy, but what I am saying is that for the first time in history, there is a coalition forming. And if done the right way, using transparency, using commodities, using mutual beneficial tactics, where no one country rules the roost, then indeed I think it has a very, very strong probability of working, at least working out their differences enough to allow them to, at least try and reach their ultimate goal, and that is of having a group of countries that is not beholden to the West and to the West's ideology.
Right. I mean, one of the counters.
This shift towards a multipolar currency landscape is marked by the growing inclination of nations to conduct bilateral trade agreements in local currencies, thereby diminishing their reliance on the dollar. The strategic expansion of the BRICS bloc and its flirtation with alternative trading currencies underscore a broader trend of de-dollarization. This is not merely an economic maneuver, but a geopolitical statement, reflecting a desire for greater financial autonomy and a rebalancing of global economic power. In this context, silver's allure is not just its historical status as a store of value, but also its potential role as a linchpin in a new financial order that seeks to challenge the dollar's supremacy. The implications of this shift are profound, not just for the precious metals market, but for the global financial ecosystem at large. As central banks and investors pivot towards assets that offer stability in a volatile currency landscape, silver's role is magnified. The volatility in exchange rates, coupled with the quest for assets that can safeguard against currency devaluation, positions silver as an increasingly attractive option. This is not just speculation, it's a strategic realignment of investment priorities, reflecting a deeper understanding of the vulnerabilities inherent in a unipolar currency world. Moreover, the potential for silver to serve not just as an investment asset, but as a medium of exchange in international trade cannot be dismissed lightly. The historical precedents for using silver in trade, combined with its intrinsic value and wide industrial usage, make it uniquely positioned to play a significant role in the emerging financial architecture. As nations and blocs like BRICS explore alternatives to the dollar, the conversation around silver transcends its immediate investment appeal, touching upon its viability as a cornerstone in a new era of global trade. This exploration into the strategic importance of silver in a diversifying global economy is not an exercise in nostalgia. It's a forward-looking analysis that recognizes the evolving nature of global finance. The growing discourse around silver, fueled by geopolitical maneuvers and economic policy shifts, points to a broader revaluation of what constitutes a reserve asset in the 21st century. As we delve deeper into this narrative, it becomes clear that the resurgence of interest in silver is more than a market trend. It's a reflection of a world in transition, searching for stability in an era of unprecedented economic and geopolitical flux. In this dynamic landscape, the allure of silver extends beyond its immediate monetary value. It embodies the broader quest for a more balanced and equitable global financial system. As we stand at the crossroads of history, witnessing the potential recalibration of the world's economic order, silver's prominence in this narrative is a testament to its enduring value and versatility. The journey ahead for silver is not just about market speculation. It's about understanding its role in shaping the future contours of global trade and finance.
Look, these BRICS nations wouldn't even have to do something that provocative, although I think they may. They could say one of two things. They could say we're taking other currencies besides dollars, and just that admission alone.
But they've said that. They've practically said that.
They said we're open to it, but they haven't said we're going to. We'll take these 5 or 6 currencies. Or maybe it's more along the lines of they just say to all of the BRICS members, which represent the majority of human population, is that we're going to trade in local currencies, or we're going to trade in gold, or whatever it may be. If the desire or the need to hold US dollars is waning to that degree, or in fact is completely disincentivized, it creates a massive, massive problem for the US. And I think, look, a country that has chosen inflation over austerity the way that we have, a country that is, when you factor in unfunded liabilities, 150 trillion in the hole with 5 trillion in assets, a country that is in essence insolvent, that goes around the word bullying.
As the geopolitical landscape continues to evolve, the ripple effects on precious metal markets, particularly silver, are becoming increasingly significant. The strategic maneuvers by the BRICS nations to diminish the reliance on the US dollar and to explore alternatives for global trade and financial transactions are not just creating waves, but potentially setting the stage for a new era in the precious metals market. The growing interest in silver, fueled by these geopolitical shifts, points towards a profound transformation in the valuation and utilization of this metal. The inclusion of powerful economies into the BRICS fold, such as Saudi Arabia, a major oil producer, adds another layer of complexity to the global financial equation. This expansion is not merely symbolic, it represents a tangible shift towards creating a counterbalance to the dollar-dominated world. The potential for these nations to promote trading oil and other commodities in currencies other than the dollar, or even in precious metals like silver, could dramatically elevate the demand for silver, altering its status from a mere investment asset to a pivotal player in global trade dynamics. This evolving scenario underscores a broader trend of diversification away from traditional financial systems and assets. As nations and central banks seek to hedge against the volatility and uncertainty associated with fiat currencies, particularly the dollar, the allure of silver grows stronger. The metal's dual role as both an industrial commodity and a financial asset makes it uniquely positioned to benefit from both economic growth and financial hedging strategies. The anticipated surge in demand for silver, driven by its increased role in a multipolar currency world, could lead to significant shifts in its market dynamics. Moreover, the strategic importance of silver extends beyond its immediate financial implications. The metal's industrial applications, from electronics to renewable energy technologies, mean that its demand is not solely contingent upon investment and monetary policies, but is also deeply intertwined with broader economic and technological trends. This dual demand stream for silver, both as an investment and as an industrial commodity, compounds its potential for growth in a world that is increasingly looking for stable, tangible assets amidst financial uncertainty. The scenario we're exploring, where silver becomes a cornerstone of a new global economic order, is not without its challenges. The transition from a dollar-centric world to one where silver plays a significant role in global finance and trade will require not just shifts in policy and practice, but also a revaluation of the global financial mindset. It calls for a departure from conventional wisdom, embracing a future where precious metals regain their historical role as pillars of economic stability. As we navigate through these geopolitical and economic shifts, the conversation around silver and its place in the future of finance becomes more than speculative. It becomes a critical analysis of how we understand value, trade, and stability in a rapidly changing world. The journey ahead for silver, characterized by potential volatility and unprecedented opportunities, mirrors the broader quest for a more diversified, stable, and equitable global financial system. In conclusion, the rise of silver in response to geopolitical shifts and efforts to diminish reliance on the US dollar represents a fascinating convergence of history, economics, and geopolitics. The potential for silver to emerge not just as a key asset, but as a linchpin in a new financial paradigm is a narrative that encapsulates the complexities and uncertainties of our times. As we delve deeper into this unfolding story, the significance of silver in shaping the future contours of global finance and trade becomes increasingly clear, offering a glimpse into a world where the value of currency is rooted in tangible assets, and where the dynamics of power and prosperity are redefined for the modern age.
It certainly is. I mean, look, even the West acknowledges that. I mean, Kristalina Georgieva, the head of the IMF, in the report they wrote right around the time that you and I had our interview in Vancouver, gold a barbarous relic, or gold an international reserve currency, barbarous relic no more, something to that extent. And then she came out a few months ago and said any central bank digital currency not pegged to something is fiat. Well, what would it be pegged to? And when you talk about could this happen in October in Russia? Sure, it could, absolutely. And I think the way that they would do it, because see, President de Gaulle, who drained a good portion of the gold from our treasury in 1970, 1971, proved that convertible currencies convert. So what blockchain does is allow the immutability and the veracity of which each country pegs to be there without having it convertible. In other words, maybe you peg 10% or 20% of each currency unit to gold held on the blockchain and audited by independent international auditors. You can do that if you are open and transparent and do it the right way. You still have the ability to transact monetary policy because it's not a one-to-one, but a small percentage, but just enough to tether it. Because given the choice, politicians will do what all politicians have done forever. Even going back to Roman times when they clipped the coins, that's why there are ridges on the side of gold coins, because they would clip it and make it just a little bit smaller. You do that enough, you have enough to make more coins. Well, going back to the beginning of money, politicians will choose inflation over austerity. So yeah, I think this is how you give it credibility in a system that I believe has already lost a good amount of credibility, in fact, and is losing it rapidly across the globe. So yes, the marriage of blockchain and the marriage of commodities together inspires confidence. And that's why when people say, who's going to trust? Well, you don't have to. If you do it the right way and have it audited, have it transparent, and everyone pledges the same thing to the distributed ledger, to the blockchain, you got a real fighting chance. And you asked me when we were in Vancouver, well, what could the West do? And I brought up Kristalina Georgieva's report. And at that point, she hadn't made the comment. But now she has. And she said a CBDC not pegged to something is fiat. Well, how does the West maybe stop this? How does the West maybe pull up from this nosedive? Do that. Get some legitimacy and credibility back into this system. One that is lacking it and is lacking trust. And indeed, you talk cryptocurrency again. It's about confidence. If you have no confidence in whatever it may be, then you're waiting for a rug pull. You're waiting for something to collapse. And I think no one will drink the Kool-Aid ever again the next time around, unless it is pegged to something with transparency. Zoltan Pozar calls this Bretton Woods 3, a system that will be dominated by commodities and transparency. This is the way to do it without having it convertible immediately by anyone who walks into a bank like they could do back here when this $20 gold certificate was the same thing as a $20 coin. And it's funny because now it says in God we trust, but back then, before 33, it says payable to the bearer on demand in gold coin. So it used to be one-to-one conversion. I don't think you'll see that again. But what gold will do when it marries with blockchain is to show exactly what every country has in the union pegged to this.
In this final exploration of silver's ascendant role amidst the geopolitical and economic upheaval, challenging the US dollar's supremacy, we reach the apex of our narrative. The profound implications of the BRICS nation's strategic expansion and their concerted efforts to diminish reliance on the US dollar paint a vivid picture of a world on the brink of a financial paradigm shift. This movement is not merely a speculative foray into economic what-ifs, but a tangible shift towards a reality where silver could very well become the most traded and valuable currency on the planet. The potential transformation of silver from a precious metal to a central figure in global trade and finance is underpinned by a confluence of factors that extend beyond the realm of market speculation. The BRICS bloc's push for a multipolar world order, where economic power is more evenly distributed and less tethered to the fiat of any single nation, especially the US, signifies a deeper discontent with existing financial structures. This discontent, coupled with the strategic inclusion of nations like Saudi Arabia into their fold, not only diversifies the bloc's economic base, but also enhances its capacity to challenge the dollar's dominance directly. This challenge to the dollar, articulated through the BRICS nations' exploration of alternative trading and reserve currencies, is not an overnight endeavor. It represents a series of strategic paper cuts, as described by analysts, aimed at gradually eroding the dollar's hegemony. These efforts include bilateral trade agreements in local currencies, the establishment of alternative payment systems, and potentially, the promotion of silver and gold in trade settlements. Such maneuvers do not spell the immediate demise of the dollar, but signal a clear intent to transition towards a financial ecosystem that values diversity and stability, characteristics inherently embodied by silver. The scenario where silver emerges as a dominant force in this evolving landscape is bolstered by its intrinsic qualities. Silver's historical role as a medium of exchange, its finite availability, and its broad industrial applications make it a uniquely versatile asset. As nations and central banks augment their reserves with silver, and as industries continue to rely on it for technological applications, the demand for silver is poised to escalate. This escalation is not merely a function of its physical attributes, but a reflection of a collective search for a reliable store of value in an increasingly uncertain world. Moreover, The potential for silver to serve as a medium of exchange and international trade, particularly in a context where confidence in traditional fiat currencies is wavering, cannot be overstated. The adoption of silver in this capacity would represent a radical departure from contemporary financial norms, harking back to an era where the value of money was as tangible as the metal it was minted from. This return to tangibility, in a digital age characterized by virtual currencies and ephemeral assets, offers a grounding counterpoint to the volatility and abstraction that pervade modern finance. In concluding this narrative, it is essential to recognize that the journey towards a silver-centric financial system is fraught with challenges and uncertainties. The transition requires not just economic adjustments, but a fundamental shift in how value and stability are conceptualized within the global financial system. Yet the potential rewards of such a shift, increased financial stability, reduced reliance on any single nation's currency, and a more equitable global economic order are compelling. As we stand on the precipice of this potential financial revolution, the message to silver holders and financial observers alike is clear. The future of silver is not just bright, but foundational to the vision of a diversified, stable, and resilient global economy. This is not financial advice, but a speculative exploration of a future where silver reclaims its place at the heart of global commerce, reshaping the contours of power, value, and stability in a world hungry for change. And with that, we conclude our journey to the potential future of silver in the global economy. Remember, the realms of finance and investment are always fraught with uncertainty, and it's crucial to approach them with a blend of informed speculation, rigorous analysis, and prudent risk management. Don't forget to subscribe for more insights into the ever-evolving landscape of global finance.
Admission, an outright statement from OPEC. We're not taking dollars anymore. I mean, Brazil just applied to OPEC. You have the majority of all of the oil production in the world. If they say we don't want dollars any longer, it creates a very, very, very big problem.
Why would they do that? Why would they say we don't want dollars anymore?
Well, because, I mean, look at what happens if you end up on the wrong side of the Western ideology. You can have your assets frozen. And in fact, even in the case of what's now being discussed, is to confiscate those assets and use them to rebuild the Ukraine. Look at what we did to Iraq. We went in there under a false pretense 20 years ago, and we're still occupying their country. They made $90 billion in oil revenue last year. They asked the government this year for $1 billion, and we said no. Really?
But Andy, is moving away from dollars the same as saying we're no longer using dollars? I mean, I can see from the BRICS Plus perspective, the incentive to reduce the reliance on the dollar. And as we discussed, the weaponization of it certainly hasn't helped. But why go to the extreme of saying we're not accepting dollars at all?
Because I think, Michelle, there's a large portion of the world, much larger portion of the world than is found here in North America, that is tired of 500 years of Western dominance and suppression and coercion. And I think that this is the rallying cry that's bringing everyone to the table, that people want to I think, have the standard of living and not be told how to do things. This rule-based order where we're the ones setting the rules and everyone else has to follow by them. And when you see the way all of these countries are pushing back against the West and our ideological viewpoints maybe don't mesh so well with a large portion of the world, but a lot of these countries who may have felt this way haven't had the ability to do this in and of themselves on their own. Like a country like Venezuela, who has the largest known oil reserves in the world, they just formally applied to BRICS. So you find safety in numbers, and I think that's kind of what it is. This is our shot to have the life that we want and to do it under our terms. And they are finding safety in numbers, I believe. So not to mention that, I mean, look at it this way. Why would you want to sell your oil for dollars, a currency that is being inflated away, literally, as we sit here and watch it literally lose value precipitously? Why would they want to do that? And then reinvest them into treasuries that have been a disaster? And then if you don't do what they tell you to do, or you end up doing something to defend, in your mind, your own interests, your own political, or rather your own border interests, or your